After listening, please visit us at www.netpicks.com. When I'm driving, one radio station I turn to tells you the traffic every 10 minutes. Now, this has kept me out of bottlenecks, especially during the summer when everyone flees the city. It's far too easy to focus on the immediate conditions surrounding my car and ignore what lies ahead. Now, in trading, what you can't see can hurt you, and there's no better way to protect yourself than to see what lies ahead. That, for me, involves different time frames, specifically 3, which I got from Dr. Alexander Elder, although I don't exactly use a factor of 5 like he suggests. Now, this would be a setup chart, and here price pulls back into a structure support area, plus a 50% pullback from a significant low to high, plus a 100% symmetry projection from prior corrective swings. Looks good for a setup. Except this is a 4-hour chart. This higher time frame chart shows some important information such as potential area above price that may reject price and validate this resistance area. There are minor swings making higher highs and lows, which indicates an uptrend. The trend line also gives a visual clue that there's an uptrend. So I have a setup for a long that's in the same direction as the higher time frame. I also know that a trade may run into an issue at the potential resistance area. This is much like knowing that there's a collision further up the road that may impede traffic flow. I want a decent position size, so I make some good money on this trade, and to do that, I need a smaller risk profile, so I go to a lower time frame. Now, the lower I go does have a greater risk of being more volatile, so I need to balance that with the risk. Now, this is not a cherry-picked perfect example, but was an actual trade that was set up and triggered. The issue was that price had spiked down, which made entry a little bit more difficult, so the 15-minute chart was used for the trigger. A retracement was measured on the candle that spiked into the setup zone. I had a long candle enter a zone where price rejected quite rapidly and with a close at the high. So a limit order was set at the 50% retracement level with a tight stop below the low of the measured candle. Trade triggered in and went to targets. 3 charts, 1 to give a setup, 1 for trend determination plus structure clues, and 1 to zero in on a lower risk profile entry if possible. Now, combining these 3 often leads to some decent trading opportunities with a great potential to at least lock in some gains.